All right, let's talk business finance. I know, the words financial statements can sound a little scary, but stick with me. We're going to break it all down super simple so you can finally understand the story your business's numbers are trying to tell you. Ready? Let's jump in. So, does this look familiar? You're staring at a spreadsheet and it just feels like a totally different language, right? It's like this secret code that everyone expects you to get, but nobody ever gave you the decoder ring. Well, good news, you are definitely not alone, and today we're going to be your translator. Okay, here's how we're going to tackle this. First, we'll talk about why this stuff even matters. Then, we'll get into the 3 core concepts, the absolute basics. After that, we'll meet the key reports, figure out how to read the story they're telling, and finally, I'll hand you a financial toolkit you can actually use. Simple, right? Let's go. All right, section 1, why should you even care about this stuff? Look, these numbers aren't just something you hand off to your accountant once a year. Think of them as your business's health report. It's vital signs. They tell you exactly how it's doing. And, this is fundamental stuff. We're talking about the things that can make or break your company. Your financial records? They decide how much you owe in taxes. They're what potential partners look at. They determine if you can get a loan from a bank. Heck, they even protect you if things go sideways. Getting a handle on this isn't just a nice to have. It's absolutely crucial. Okay, so now that we know why this matters, let's get into the how. Before we can read the full reports, we've got to learn the 3 most basic words in this whole financial language. These are the absolute building blocks of everything else we're going to talk about. First up, assets. It's a simple idea, really. Assets are just all the valuable things your business owns. We're talking cash in the bank, inventory you're going to sell, the computers on your desks, even the delivery van. If it adds value to your business, boom, it's an asset. Okay, on the flip side of that coin, we have liabilities. This is pretty much the opposite. It's everything your business owes to other people. So that bank loan you took out, that's a liability. The bills from your suppliers that are due next month, also a liability. It's basically all your company's debts. And the third piece of the puzzle is equity. This is the good part. It's what the business is actually worth to you, the owner. Here's the easiest way to think about it. Imagine you sold off all your assets, all the valuable stuff, and use that cash to pay off all your liabilities, all your debts. Whatever money is left in your hand, well, that's your equity. It's your stake in the company. And here's where it all clicks together. This is the core accounting equation. Everything you own, your assets, has to equal everything you owe, your liabilities, plus your own stake in it, your equity. It's like a perfectly balanced scale. This little formula is the bedrock of all accounting, and it always has to balance. No exceptions. All right, so we've got our building blocks, assets, liabilities, and equity. Now let's see how they're put together to build the key reports, the actual documents that tell the story of your business. You're really only going to be dealing with 3 main financial statements: the balance sheet, the income statement, and the cash flow statement. That's it. Each one gives you a different piece of the story, a different view of your company. So let's kick things off with the balance sheet. Remember that accounting equation we just saw? Assets equals liabilities plus equity? Well, that's basically what the balance sheet is. It's a snapshot, like a photograph, of your business's finances on one specific day. It tells you exactly what your net worth is at that single moment in time. Next up, we've got the income statement. You'll hear people call this the P&L for profit and loss. This statement is all about performance. It's simple. It shows you how much money came in, that's your revenue, and how much money went out, your expenses. And it does this over a period of time, like a month or a quarter or a whole year. And last but definitely not least, the cash flow statement. Okay, this one is so important. Why? Because it tracks the actual cash, the real dollars and cents moving in and out of your business. You can be profitable on paper, but still go bankrupt if you don't have cash to pay your bills. This statement shows if you can actually keep the lights on. You've heard the saying, cash is king. Well, this is its kingdom. Okay, so we've been introduced to the big 3 reports. Now for the really important part, learning to read them. Let's figure out what story each of these documents is actually trying to tell you. Now, one of the biggest points of confusion is the difference between the balance sheet and the income statement, and it really just comes down to time. The balance sheet is a snapshot. Think of it like a photo. It shows you where you stood on one single day, say December 31st. The income statement, on the other hand, is like a video. It shows you the action over a whole period, like the entire month of December. See the difference? A photo versus a video? You know what? Let's make this even easier. Each statement answers one big, simple question. Want to know what your business is worth? Look at the balance sheet. Want to know if you're profitable? That's your income statement. And want to know if you can actually pay your bills this month? Check your cash flow statement. That's it. Worth, profit, and cash. 3 questions, 3 reports, 3 powerful answers.
All right, this is my favorite part, because knowing this stuff is great, but using it is where the magic happens. We're going to turn all this information into a real toolkit you can use to make smarter decisions and actually grow your business. It's time to stop just looking at the numbers and start using them.
So here's a super practical action plan. You can do this today. Grab your income statement and just look at where the money's going. Are your supply costs creeping up? Is that big marketing campaign actually paying off? Find one area that seems a little too high. Then make a change. Maybe you call a different supplier or tweak your ad budget. And guess what happens? You reduce that expense and your profit, your net income, goes up. It's a simple, powerful cycle you can use over and over again. Want another pro tip? This one comes from your balance sheet. There's a little calculation called the debt-to-equity ratio. You just compare what you owe, your liabilities, to what you own, your equity. And here's a fantastic rule of thumb. Try to keep that number under 40%. Why? Because it tells banks and investors that your business is stable and not drowning in debt. Trust me, they watch that number like a hawk.
So let's bring it all home. What's the big takeaway here? Understanding your financials isn't just boring homework for your accountant. It is a powerful strategic tool. It lets you look back and see what worked. It helps you get loans for the future. It shows investors you know what you're doing. It helps you manage your taxes. And most importantly, it gives you the information you need to make smart moves to grow your business.
See? You're not just looking at a bunch of random numbers anymore. You're reading the story of your business. This language, the language of finance, it's your language now. So I'll leave you with this question. What story are your numbers telling you today? And more importantly, what are you going to do to write the next chapter?